Massmart was founded as the South African branch of a Dutch retail Makro. It also trades as Game Builders Warehouse, Dion Wired, Cambridge and CBW. It is now 51% held by Wal-Mart and has a market cap of 38 billion rand, a dividend yield of 2.3% and a price to earnings ratio of 31. That price to earnings ratio higher than the two that we've spoken about right now.
Yeah, but in the same sort of ballpark. I mean, I liked Rob's earlier point about, the sort of, is this the new normal? Because to be honest, they're all on that sort of forward earnings multiple. So, I mean, the point is that's what the foreign investment community appears to be happy to pay for an emerging market retailer that's well managed. But I like this one. We've been in this one, in fact, the longest. So the core Vestac customer base has always owned Massmart. We got a hell of excited when Wal-Mart came to offer 148 for it. We hung on to the half because they only ultimately bought half. Many clients then bought back in, and it's continued to do well. But the earnings have been rather spotty, partly because of the deal and all of the uncertainties, and the legal fees of the transaction were high because the government gave them a hard time. But I think management team, Grant Patterson, they're now ready to proceed with the African growth expansion, which is what Wal-Mart wants.
Do you have holdings in Massmart, Rob?
We do have holdings in Massmart. I think that the problem that they're facing is to get into that market, especially on the food side, they've come down very, very low pricing. And obviously their margins are a little bit under pressure to start to get a footprint, start to take business away from the other food retailers like Woolworths, especially ShopRite. So they've come at very low levels. And then also the food in Game, I mean, I've gone through there, the food looks really good, well priced, but it's such a new thing for the customer to see food at a Game store. So I think there's a bit of teething problems there. But if they get it right, and they've got obviously they can import a lot of food through the Wal-Mart side, especially on the dry food side, and that they won't be affected so much by a weaker rand there. So going forward, if they get it right, it's looking good.
What do you make of the African expansion, Paul? They're pretty much focused on SA right now, though.
Yeah, but they've done good work in Angola, and they're into some of the other countries on the Western Rim and so on, and they've worked hard to arrange the shipping and all that stuff. Look, there are three things I like about it. The one is the big box retailer concept, because that's what Wal-Mart, which has woken up as a share in America, is all about. It's all about, the single destination for bulk buying. I like the Builders Warehouse division. High-priced sort of home renovation, items for the middle classes. Very strong business model, modeled basically on Home Depot and Lowe's in America. I think that could be a standalone business in years to come. But the one that I'm most excited about is that Cambridge business model, which are, very sharply priced items, limited range in high transit areas like taxi ranks and so on. That's a big growth area for them, and I think that, in fact, is the model that they'll take into the rest of Africa, because that's where you really get the efficiencies and the distribution scale, and the margins are fabulous.
So hot or not for you?
Yeah, no, still hot for me.
Rob, hot or not?
Still hot for me.
Oh, so two hots on Massmart.